Hello guys, welcome to the Train Parrot. Today I wanted to do a video about how to manage red bags, particularly with 3x tokens. Those are pretty challenging red bags to manage, especially when you go to 99% loss. It depreciates very quickly. It's charging everyday fees. So that makes it really challenging to actually rescue them. But here I'm with Eric, and he has had very good experience rescuing red bags from even 90% or above. And I got really impressed with his technique for rescuing red bags. So I asked him if he can explain to us how, with a few examples from the past, particularly from around May, when there was the big dump of the price of Bitcoin. The correction was over 55%. And of course, the alts, they were seeing up to 70 or 80% correction. And if you do multiply that by 3, it's really challenging to close them. So in this video today, we're going to be looking at the signals that cause this situation. So the signals that we have in the channel that are at the moment dealing with 3x tokens is a Parrot Poison and Petro. And we're going to spend some time looking at what's the backtesting performance during the past 2 months. But we are going to acknowledge that if there is a correction on BTC of the size of May, like a 55%, it's very tough for the signal to understand and forecast it and stop sending signals before the dump. For that, we have the market orchestrator, which will have sent a signal right before the dump here. But if you were not using the market orchestrator and you don't respect the stop signal that day, and there's no way to exit these deals. It's very difficult. And I think it's going to be very interesting today to see how Eric managed to actually close 3 deals. I'm not sure how many deals you're going to show us today, Eric.
I'm going to show you 2 deals today.
2 deals. And are you using the Advanced Simulator from TradingView or tool?
Yeah, I used that one. Before I used it manually, but once you released it, I started using the Advanced Simulator. It really simplifies it.
Cool. So first in the video, I'm going to show you, people were asking me, if you re-enable Parrot Poison and Petro, what sort of returns should we be expecting, assuming that now we are going on a bull market and that we can really make a lot of profit with 3x tokens. And at the same time, in the same video, we're going to talk about the bad things that can happen, right? So if we get a correction 55%, what are our chances to close those deals? What sort of technique can we use to close them, to manage them? And at the end, we're going to have a discussion on whether it's worth closing those deals, because there's different opinions and different psychologies that some people will want to close it no matter what, and some other people will like just to move on to something else. To start with Parrot Poison. Parrot Poison was a signal that was designed to buy decent corrections on 3x tokens. So as you can see, it's not buying tops, it's actually doing the opposite. It tends to buy when it sees a significant correction, and then it takes advantage of that. Still, it's got a pretty good deviation. That's a very large deviation. It's like 45% deviation. And even with a 45% deviation, is managing to actually use most of the orders. Like here we are seeing on Matic 48 with the base order closing, 26 with 1 SO, 11 with 2, 3 with 3, and so on. I think a good example could be ADA maybe. On ADA as well, it's doing 47%, it's managing to close deals, is doing pretty well. So this signal on a market like we had in the past 2 months, it should work pretty well. The limitations of this signal will be a significant correction. If we get a correction of over 35% in the market in general, I'm talking actually about a correction 30% on BTC, because we get a 30% on BTC, and then obviously total cap gets much more corrected. Like if you look at when Bitcoin corrects 30%, then any alt will correct larger than that. Then you could say that you're going to sweat it with a token like this, even if you have 45% cover deviation, because some tokens are going to correct more than 45. Some of them easily will get to 70, 80. In some extreme cases, like in May, they will go to 90, 99% correction. And that is part of how 3x tokens work. And in those cases, there's literally no point on using DCA settings that DCA to levels like 99%. There's literally no point. Because 90% of the time you will never use those safety orders, and you will just use it once or twice a year, and that wouldn't be a very efficient way of using the funds. So I went through all the tokens, and literally all of them are doing pretty good. Even this, I will say, is expected. So we have 3 safety orders. So this one on Ethereum is just using the first safety order. So even though it says 12%, it looks scary for 3x. And the design of this bot that goes to 45, this is kind of expected, and it should survive as long as, tomorrow we don't have a 50%, crossing fingers that we don't have one. But in normal market conditions, corrections of 20, 25%, Parrot Poison should do pretty well. And then we have Petro. Petro is a little bit more edgy. It takes deals not necessarily on big dumps. It actually uses a different signal. And this one is one that requires some market protection, is much more frequent. It's opening deals very frequently. And you can see that still has good returns in the past 2 months. 23% here, BNB 40%, and it's not even using the last safety order. So that's pretty good. I'm actually on this one on Petro. I'm using the technical rating as well of buy on the 30 minutes to filter out some bad entries, because this signal is based on the 5 minute, and so it's trading very frequently. And being behind that protection that gives the technical rating of trading view of 30 minutes is very good. It kind of filters most of the bad deals. And yeah, I'm thinking I'm going to re-enable these tokens now on the assumption that we are entering again a bull market. If there is a huge correction and you are on leverage, that can be painful. And that's why I want to ask you, Eric, because you were running actually Parrot Poison, and you got some bad deals. You enter on Parrot Poison a few days before the big correction on BTC. So you didn't have that grace period that I always talk about, which is if you're running something like this and you manage to make 80% on the signal for a period of 2 months, and then suddenly you enter out of the 8 deals, 1 that is bad, and you just close it, you can offset that loss and say, well, I'm 80% up, and with this deal, I lost 40%, but 40% of 1 out of 8 deals. So that is insignificant with the 80% total that bot gave you. So you can tolerate that, but you were just running it for a few days, and it hit you hard. And then I was really impressed with your technique for closing red back deals. So what would you like to show us some examples?
Yeah, absolutely. It was very painful to start it, have some success a few days, and then boom, 90% loss. It was like, holy. I know what you mean. Everybody in the beginning when they enter crypto is like, okay, crypto is very risky, and you should only put in what you are willing to lose. And I was like, yeah, okay, I'm fine with that. But then when you are actually for the first time seeing deals that are minus 40%, that kind of hurts. Then you got used to that, but then with the Parrot Poison, it wasn't just 40%; it went down to 90%.
Yeah.
So I was like, I'm also kind of stubborn. I don't want to cut my losses and let my money run on other stuff, which I probably should. So I'm trying instead to, okay, what can I do to actually salvage this? Requires a lot of manual intervention, technical analysis and stuff. And let us go through a little bit of it. I'll share my screen here.
One thing to add is that when we released the signals of Parrot Poison and Petro, the market was extremely bullish. And, the weekly RSIs, they were doing higher highs constantly. Whenever there was a correction, we were just after 1 week recovering. Mm-hmm. So I was all in on the signals, and I was investing, I don't know, 10K, 20K, and they were really profitable. But as we were getting to that period of exhaustion at the top, and when we were seeing the weekly divergences on the RSI, and then after I published this article that the market was running too hot, that is the right time to maybe considering reducing the funds or just straight switch off some of the most risky signals. At that point, I have to say I was only running it with 1,000. So I went to 10% or 5% of the funds invested in that bot, because I was assuming there was not much more that we can get from this. But many people were landing in the channel by the word of mouth that the signals were so good. And then they started using the signals right at the end of that cycle. and that's exactly what happens in crypto to many people.
Yeah, I have that experience. But also it was like, I still don't, I should have stopped the bots when all the indications were saying that, but I was a little bit greedy. I always knew I wanted to get in on this as well. All right, now I share my screen and I have Parrot Poison here. The two latest deals I would say here is on the BAL token and on VetBAL. The BAL token is the BTC BAL, but for some reason FTX decided to not show BTC BULL. And
wait a second. On the column close on, it's showing that you had this deal open for 2 months and a half.
Yeah.
Wow. Yeah. So you literally you stick to your bull and you say, no, I'm not closing this deal. I have to close it. And wow, that's impressive.
Yeah, I went stubborn and I was like, okay, let's dig into this. Let's learn technical analysis and stuff. I'll actually show you here on the BULL token. The deal entered here. I'm on the daily, and it entered here. Safety order, and then it was a free fall going down even further.
Yeah, I can see.
So I think this one is actually 78% down. This is a manual entry, but as you can see, it flattens out here. It's even though we have had great success going forward, the BULL token, since they are re-leveraging, they are not coming back at the same level.
Yeah.
So if we follow up here, then you see, boom, now we have interesting stuff. But since it comes from such a high number going down, when you open, if you are 97% down on your deal, and the price from that point is actually bouncing 50% up, it will only show maybe a few percentages from you. So it possibly goes up to 93% minus. Yay, happy. But if you are able to actually enter great positions here when you add funds, you can hopefully exit those 20-50% increases.
But tell us a little bit, I mean, you say that you decided to study a little bit of technical analysis. So what did you use to decide when to enter, at what price, and with how much volume you needed? Because that is not necessarily obvious to many people.
Yeah, I'm using your ad funds simulator. You're entering the deal information and stuff, and then that one uses RSI, for example. So you have it shows you RSI when it's overextended. That's probably a good place to start. you have here, it's the divergence indicator. I saw RSI is really good, but then we had some discussions about market cipher. It uses divergences and stuff. And then I realized divergences are actually apparent on RSI as well. So I changed to actually have the divergence indicator as well to show, okay, now it's a bull divergence, a bear divergence and stuff. And also the MACD. So I have your ad fund simulator here. I have the divergence and the MACD. So I have 3 different combinations to actually show me, okay, is this entry a good one, or should I probably wait since the MACD is still above 0, for example?
Yeah, but specifically, what do you look for as a good entry? For example, on the divergence, you have it. I noticed that you have it there on the 2-hour, right? And then on the 2-hour, you just look for the bull flag, and then you validate it with something from the MACD. How do you combine that and decide?
When I messed around with it, I saw that, okay, the bull tokens are moving quite much. So I wanted to have a strong signal for when it's actually being overextended and are probably going to bounce back. 2 hours is a really good medium, I would say. So I have 2 hours on MACD and divergence. So it's spanning a long time. So when it is actually going down, pretty much it's a big chance it's going up as well. Then I had just put a line where I thought, okay, this is where it's often hitting and going up, back up. The same with MACD as well. You can see here it's a lot very far down here, and then it goes back up and it stays compared to this overextension. The recent price here haven't moved that much.
Yeah.
So I'm basically looking at the chart. Different tokens have different values as well, I would say. So I'm finding out that if we are looking at MACD, for example, I can see that once it's hitting below this line, it's often a very good place. So when I have the ad funds simulator, I'll show you here. I added the average price, the funds invested, the time I started it, and then also I expect big bounces. I don't want 2%, because if I want to have a 2% bounce, then
you need a lot of funds.
Yeah, exactly. So at minimum about 10%. That's reasonable.
Yeah, and that's reasonable for 3x tokens. On a spot token that you want to rescue, at 10% might be a little bit too much.
Yeah, that would be hard. I would do 1 or 2% to just exit quickly.
Yeah.
Then I'm actually using the RSI low here as well on the 2-hour time frame. Because once it dips down there, it might go back up during those 2 hours, but it has been down here, and I want to know that. And then I also put an alert. So once the price hits the threshold, I get an alert on my phone, and then I go into this view and I look, is this a good entry? I have RSI down here. I have the MACD. No, it's not down there. Then okay, I should wait, because I've already lost my money. Instead of cutting it off, I could just as well wait, I would say.
Eric, in practice, I'm seeing now the ad funds, the flags in green on the top that are appearing. Those are the entries that you're considering good times to add the funds based on that strategy. But which one did you in practice ended up using? And did it tell you how much funds? Did you respect what the ad fund simulator was telling you in terms of funds?
I respected that. I even added a little bit more as well, since I was like, okay, this is a good place, and I want to quick exit a little bit quicker. I have filtered out the ad fund amount isn't shown here, but I didn't actually respect this one because I had 2 deals open at the same time, and I decided I don't want to overextend my risk on my whole account, so I only decided to rescue VetBull, and that was around here, the yellow line. I exited that one around there. And then a month later here, I exited the bull token because I don't want to add funds to two deals at the same time. That would overextend too much. So I added this one. If I would have added funds to both of them, they would both have been closed now at this point in time. But risk management, one at a time. So I had to wait for the bull token to actually exit here. I think I added funds around here or possibly here on the bull token.
And how do you, because this is a long period of time to wait. I see the flags, they're pretty close to each other there, but the lapse between them sometimes is a matter of a week or even longer.
It's a 4 hour here.
Yeah, and obviously you cannot be constantly looking at the ad fund simulator to flag again. So are you using alerts to tell you when the conditions are met so you can take action, or you're doing it automatically? How do you do it?
I have on the divergence indicator, I have this line where when it hits, it's the same value as I have in the ad funds simulator. It's at 20. Then I just click it and have I'm adding an alert here. So once the price is hitting this place, when it's crossing, I notify on the app and on the pop-up, so I actually know directly when it happens, because once it happens, it might bounce up quickly. So I want to be able to review this quickly.
Yeah, and then decide to take action. And another thing is, I noticed that you're using the RSI 7 and you're using the low input, not the close input. And why is that?
I use 7 because crypto is volatile and it happens a lot. So I want to have it in a short time frame. If you're doing stocks, 14 is the regular, but I think 7 is more common in the crypto world. And I'm using low because that's the low point during the bar. So it might go down and touch that and then go back up because the price is increasing again. But I don't want to see what it closed. I wanted to see, okay, how low was it actually? Because I want to fetch the times when it's going down quite a lot.
Yep, makes sense. That's pretty interesting. So, okay, but that wasn't necessarily the only deal that you rescued. You mentioned that there were at least 3. And I can see here that you were also dealing for quite a while with VetBull. It was open like a month and a half, almost 2 months, right?
Yeah, almost 2 months.
Almost 2 months. And you had to actually add 2 times more.
No, 5 times.
You needed to add 5 times funds to exit this one. But you still manage and you exit a profit.
Yeah, I was a little bit more conservative with how much funds I added, because I wanted to, okay, is this a good entry? Possibly. Otherwise, I entered lower in. So I kind of did a manual DCA here.
Yeah. So with Bull, you kind of went much more aggressive. You use a single bullet and you managed to close it. With Vet, you were trying and taking more conservative steps, but still you closed it. But it served you to understand how to do it.
Exactly. Started here on the daily, all the regular safety orders. And then I entered down here and a few times. You see here, it's basically becoming flat. I entered here, it went up a little bit, but not enough. Same here, it went up a little bit, continued down, third time, and then I could exit up here.
And once you get the signal, once you get the alert and you logged into 3 commas, do you use the limit or the market order to rescue the deals? Do you want to go as soon as possible or wait for a specific price?
Depends, but often I would say it's a limit price. I see, and I judge, okay, it would probably hit here again, and then I wait for it. If it doesn't happen, I don't do it. It depends on if I can find the time to go through this when the alert is firing. It's reasonable to just do it directly. But if I do it like 4 hours later, I might have missed the opportunity. So I want to be a little bit more conservative here. We can see here I added funds here. It was quite good. Should have waited a little bit. Then we had a correction of let's see 80%. So I waited a little bit. Should have entered here possibly, but I didn't. And I added not enough funds here. So I had the second one here. I ignored these ones. I think it was because, as you can see on MACD, it's actually quite steep going down. So I was like, okay, it possibly going down even further. So I want to take it easy. Added here, didn't went up again as much as it did. Ignored these ones because you have different. I didn't felt good about it. And you see here the MACD can't really decide what it wants to do because you basically want to have some kind of momentum as well. And it also depends. Sometimes I only watch the divergence and RSI and it feels like, okay, this is a good entry. Sometimes I want the double confirmation. It really depends on how much money I want to spend and the market, general feeling of the market as well.
Yeah. So when did you end up entering with the final?
That was on the 25th around here. And then I had to wait for the exit up here.
It looks pretty flat. I don't know how you managed to exit at that point. But now it looks better. Okay, yeah. So you entered there.
Yeah.
But with much more volume.
Yeah.
And then
possibly that it's should have entered here as well. Possibly. I don't know. I'll have to look. Because if I enter here, it's the same price. Yeah. So I must just have missed one more entry down here. Some of these ones.
Do you have the history on 3 commas?
Yeah.
I see.
We have the starting price here is almost 800 and the exit here is $3. It's insane.
Wow.
So the question is all of this reasonable to do? I don't know.
That's a good conversation that we can have there. I mean, you're waiting for 2 months with the deal. You're trying to find the best condition. Mm-hmm. And from my perspective, what I see is you have a deal that is 90% down that you can decide to straight away close and take the loss. Mm-hmm. and then keep moving on into something else, something that is more attractive. Possibly you could say, okay, I want to take revenge of this token and I want to make a good deal with this token.
Always a bad idea.
just to prove myself that I'm going to put more volume, make more money and offset the loss. And that will technically be equivalent to rescuing the redback deal. Or you could say, well, this token is a lost cause. And I could move on to another token that has a good prospect, and I can use my remaining funds in my account to make a pretty decent deal. And from that deal, still offset the loss. And it doesn't have to be on the same token. It doesn't have to be on the same bot or the same strategy, the same signal. Something could stop working well and for a period of time, and then you can move on to a new strategy and still end up in the green. So the question is it a must that you have to rescue all the deals, or sometimes the risk reward is better somewhere else?
In the beginning, I was pretty stubborn because I never wanted to exit at a loss. I was like, I don't need to. I can just wait. Crypto is super volatile. Also, since I'm new, I felt like, okay, DCA is really nice. I can just DCA in, and in the end, I can profit because it will probably, hopefully, go up again. But then at one point, I was so stubborn. I think I had like 25-30% of my whole portfolio in one rescue because I was stubborn. And then afterwards, I didn't feel good about it. It was like, okay, but if this one goes down even further, I'm screwed. So
that's the end.
Yeah. So that I learned that, okay, this isn't reasonable. Take a step back. Maybe taking a few losses is actually good in the long run. And also, I would never go using Petra again, having 20% of my funds, maybe like 5% of my funds, because if one of those deals are 1% of my total portfolio or something, I could easily like 10x that one or something without risking my whole portfolio and be much more comfortable with it, and also closing it quickly, or just cutting it off.
I really like this say that they use in Chile. They say, don't put all the eggs in the same basket. It makes a lot of sense. There's a different variations of this say in different countries. In some countries, they don't like to use eggs. But I learned it that way, and I totally get what it means. And you have to distribute your risk among different things. And on crypto, you learn the hard way that betting hard on a single thing is a recipe for disaster, because anything can happen. And particularly, you need to identify the risk associated with each of the signals, bots that you're getting involved with, and understand what can go wrong and what's going to be the plan once those things happen. Like, let's say, if tomorrow you're running 10 bots and the market corrects over 50%, then what are you going to do? How are the deals going to look like? And for example, you could say, well, I have a bot trading top pairs, and if something corrects heavy, way far from my last safety order, I'm just going to hold it, or I'm going to put it in a grid, or I'm going to stake it and forget about it and move on to something else with new bots that are more adequate for the new conditions of the market. You could say that, and that could be your plan, but at least you know what you will do. You need to enter on a bot thinking, if things go well, I make money. If things go bad, I will do this other thing. But you have to have a plan B, a backup plan, and not just blindly assume that things are always going to go in the way you want them to go, because crypto will teach you the hard way that you're wrong. And that's the thing. And in my case, my plan was run Petro, run Parrot Poison, and run them when we are on the altcoin season way below certain levels, and seeing that there is a strong indication that the market is going up, and still using 5 to 1% of my portfolio on them, and make as much money as possible, but always with an eye on the market. Are we seeing bearish divergences on the weekly, on the daily, on the 4-hour, on different indicators? The more I see them, the more I take away from that bot, and the more I put in more bearish bots, in more conservative bots. And when things go extremely bad, then I just call it a day and I close that bot. So if I started with 20K and then I went to 10K and then 5K, and the last day I was on 1K and I lost that 1K, but the 20K made me 80%, I'm still happy. So that was precisely my plan. And I knew that if things go south, I wouldn't have time during a period of 2 months to monitor those bad deals and close one by one. I wouldn't have taken that risk either. It's very educative to see that you can close any deal. And we have Eric here showing us that, yes, I mean, in practice, not just in theory, in practice, you can close very tough deals, but you are taking a lot of risk. And you need to really be stubborn. You need to spend a lot of time. You need to do technical analysis. You need to learn the advanced simulator tool, how to use it, or use alternative tools. But you need to know what you're doing. It's not just a matter of throwing money at random time. If you did that, I mean, it will get way worse, because you go from 500, then randomly you add 1,000. And then that 1,500 is again minus 90%, and again minus 90%. And you can go all the way to 100K and still not exit if you keep doing it at the wrong time.
Definitely. I think it's also important to have different strategies. If you are in the spot market, then you can hold the tokens. But if you are in the leverage tokens that we're discussing today, you have to have a different mindset and a different risk assessment as well, I would say. Especially also if you go full leverage, when you can get liquidated as well. That can hurt.
Yeah, that's very good. Well, guys, I hope you enjoyed this video. There's a lot of information. I learned a lot from Eric. This was really cool. Thanks, Eric, for being here again. And we're doing really great videos. Leave us comments below. Tell us what you think about us, talking about bots. I'm really enjoying this. I hope you guys in the channel are also enjoying these discussions, learning a little bit more in detail how to run these bots, how does it feel to run them on a day-to-day, all the ups and downs, and how you can take away things and then implement it yourself and decide what's going to be your own way of dealing with the bots. Thank you very much for watching. I'll see you on the next one. Bye-bye.
Bye-bye.